What is up, guys? Taiki here. Welcome to the private video for August 19th. So I'm back home again. I'm moving to New York next month, so I'm just visiting friends and family for the last time. So this will be the last time you see this this tiny bedroom, this background, and poor audio quality. But I guess you can argue my audio quality has always been pretty bad. So maybe you're basically used to it. So first I'll talk about Frax, because Frax or FXS is like one of the few things that's actually green, right? Other than like Stargate, which is like up like, what is it? 140%, which is kind of ridiculous to begin with, but maybe we can talk about that later. And it's not because there's no news. There's actually catalysts coming up. One is Fraxlend and the other is frxETH. None of this is financial advice. So this has been circulating on Twitter, depending on the people you follow. But frxETH is going to be similar to Lido's staked ETH, right? It's a liquid staking derivative of Ether, and there's a curve pull. This is not going to get adoption anytime soon. Over probably like the next month or two, but you can think of Frax, right, the Frax ecosystem, as this whole infrastructure system. Sam likes to call it the Trinity, but it's centered around this native stablecoin, which is Frax, and there's a native AMM being built on top of it, which is Fraxswap, lending, right, money market via Fraxlend, and then ETH staking via frxETH. Yeah, so I'll link the Twitter thread into the description below for the person that took these notes from the Blockworks Twitter Spaces with Sam. But frxETH is going to be basically the same thing as staked ETH with Lido. And if you think about it, if this gains adoption, you can kind of view FXS as just a way to gain exposure into just AMM lending and staking, right? Staking ETH, liquid staking derivatives. Of course, Lido is going to be the market leader with the whole liquid staking derivative space. Uniswap is going to be the leader for AMMs, and then Aave is going to be the leader for Aave or compounder maker, right? Whatever, right? That group is going to be the leader of each respective sector. But if you think about what Frax is trying to do, I think it's pretty interesting. And frxETH doesn't really have additional advantages from what I've seen over staked ETH, right? Because staked ETH is more liquid, so you can argue that it has more utility. Maybe frxETH can receive more curve emissions because Frax owns so much CVX and whatnot. But I feel like one other use case, additional use case that frxETH can have is, with Fraxlend, Sam mentioned before that Fraxlend is going to enable custom term sheets for both DAOs and individual lenders. I mean, the details aren't out yet, so it's really hard for me to say. But I mean, the main value add for staked ETH by Lido is that you can use either, right, stake it, earn 5, 6, like whatever, right, APY percentage, and use it in DeFi. You can use it as collateral on Aave. You can be a liquidity provider for it on Curve, Balancer, Uniswap, whatever. So obviously, frxETH is going to have all of that, but perhaps in the future there could be a way for people to borrow against frxETH, right, at a fixed interest rate, and that's one of the problems that might be solved here, because I know with Aave, you can use staked ETH as collateral, you can borrow stablecoins against it, but that stablecoin borrow rate is going to be volatile. And in a bear market, it's typically lower, right? So it's not that big of a deal, and Aave does have the option to borrow at a fixed interest rate. But generally, it's not really recommended that anyone do that because the rates are so high, right? If the variable interest rate is like 2%, then the stable interest is going to be like 6%. And if the variable rate's like 4%, then the fixed rate is going to be like 12% or something, right? It's not really friendly, but it's definitely an option. So perhaps if anyone that stakes with Frax can borrow against their frxETH at, let's say, even like a 2.5% fixed rate, perhaps that can gain more adoption. But I don't necessarily think that frxETH is going to be like the major bull case for Frax. But if you think about how the hot narratives right now, right? I mean, liquid staking derivatives is one of the best performing sectors right now, led by Lido, Rocket Pool, and Stakewise. And if FXS can even capture some market share, then it can set up a potential catalyst in terms of narrative, right? By FXS, you get to bet on staking derivatives, lending, and the stablecoin, right? I mean, maybe that's what people end up buying into. But I think what's more interesting is Fraxlend. So I guess I'll first talk about Fraxswap. So the team initiated the $20 million buyback program. At the depths of the bear market, or I mean, like back in like May or June, right? And that's still happening. I believe the rate is like $2 million a month, which happens, over a very long period of time. And I think the team isn't buying back FXS with $20 million because they want to pump up the price. And obviously they're buying it back because they think it's severely undervalued, and that's the best use of their capital right now. But I think what Sam is more focused on is marketing their products to DAOs. Sam mentioned that Fraxlend has overwhelming demand from DAOs. I don't know what that means, but that's what Sam said in his own words. And Fraxswap, I think the main use case for Fraxswap is going to be a way for DAOs to buy back their tokens without putting in green dildos, right? Or like massive wicks. If you look at the chart of FXS, I mean, the price is acting like there's no buyback actually happening, right? But there's no major volatile like candles, wicks, because this TWAP, right, TWAM is happening over a prolonged period of time. And if the current rate is $2 million a month, then, and if that rate stays constant, then maybe in the next 10 months, right, they actually execute the buyback program. And then after that 10 months is actually over, then they can say to other DAOs, hey, like if you want to buy back your own token with size, use Fraxswap, because look at us, we bought back 10% of our market share from Frax to FXS without moving the price in any significant way. So I feel like that's the trend Sam is trying to go towards. I think it's really difficult for the Frax and FXS team to get for them to market to individual consumers and DeFi farmers to hold Frax as a store of value. Because I'm sure you and I, right, we hold USDC and Tether or DAI in our wallets, and sometimes we're just holding it in our wallets, not farming with it, right? But if you do buy Frax, you're not going to buy Frax to hold it in your wallet, you're going to buy Frax to farm with it somewhere. So one thing about, I guess, the dollar system, right? There's a lot of demand for dollars because a lot of the debt, foreign debt, is denominated in dollars. And I think Frax is trying to market Fraxlend to other DAOs to incentivize them to borrow against their treasury or their token or whatever, right? Borrow against their collateral and borrow Frax with it, right? So if many DAOs have Frax denominated debt, then maybe that can increase demand for Frax. And Fraxlend is also going to enable custom term sheets. Do I have it here? So going back to the Fraxswap TWAM functionality, will cater to large protocol-owned liquidity. I feel like as long as you think that DeFi is going to grow as a space over the next years, I feel like Frax is just trying to center themselves around that by building infrastructure to allow teams to buy back their own tokens, allow cheaper debt, right, with custom term sheets for DAOs and also for individual consumers to really create a lot of Frax denominated debt, which will create demand for demand for Frax, and then Fraxlend. And I think it's going to be really similar to Abracadabra / Kashi for sushi, where it's going to be these isolated pools where if you borrow against your LPs and you get liquidated, then your other collateral is not going to be at risk, right? So if one DAO gets liquidated, then other DAOs are not affected, essentially. And like I mentioned earlier, Sam mentioned that there's overwhelming demand for Fraxlend, and I think the value add is that these DAOs, they can use maybe their treasury as collateral and borrow Frax against it to pay people to earn yield, whatever they want to do, without having to worry about variable interest rates. So maybe a DAO, right, has a bunch of Ether. They could use that Ether as collateral and borrow USDC against it and farm, but they don't want to worry about variable interest rates. But using Frax, they can just use any asset as collateral, borrow against it at a fixed interest rate. Maybe that interest rate ends up being 2% to attract more borrowers, and then you kind of increase the velocity of Frax that goes around DeFi, which is going to create more demand, or I guess more volume on Frax BP pools, which is going to increase the yield, and which is also going to benefit Curve and therefore Convex. So maybe that's what they're going for. And I heard chirpings of Fraxlend coming out by the end of the month. I heard the 24th. It's not confirmed. I don't know where this person got his information from. But if you're on Telegram, if you're like lurking the Telegram / Twitter, that stratosphere, he did mention it's coming out very, very soon. But very soon in crypto can mean many weeks, because I have no idea. So maybe let's be optimistic, right? Like maybe Fraxlend comes out the 24th, and then they launch with like partner DAOs, right? Borrowing like $100 million worth of Frax or something, right? I mean, that could definitely be a catalyst for me personally. Like I purchased FXS, I lump summed into it, just staked it on Convex. I'm just gonna let it ride. Not gonna spend like way too much headspace on it. I purchased FXS not because I want to sell at a 2x, but I believe in the team. I believe that they're building core infrastructure. I believe that Frax and FXS is one of the few ways to bet on the growth of stablecoins in DeFi. And stablecoins, in my opinion, is the only up-only market in DeFi, right? Or in crypto. So any bet that I can make tangential to the stablecoin sector is something that I'm really, really interested in. Yeah, so this is August 19th. frxETH is not a few months away. Fraxlend is imminent. frxETH, right, adoption port maybe a few weeks after Fraxlend. So maybe sometime in August, Fraxlend, and then sometime in September, frxETH gains more adoption. And ideally, I think, FXS, like rationally, right, they should want to ship this before the merge, just so they can, accumulate some market share. But who knows? Like, it's something definitely to monitor. And, the market doesn't lie, right? I mean, FXS is up 5% while Bitcoin is down 8%. So, fundamental catalysts coming, which is good to see, right? There's not that many fundamental catalysts happening in crypto right now, just because a lot of teams have left. But, it's definitely there, right? I just choose to hold and let the team ship. All-time highs or nothing, right? Valhalla or zero, right? I'm totally okay with that. And yeah, like when I say like Valhalla, yeah, like I expect all-time highs in FXS and Frax market cap. I don't really know when it happens. I don't really care when it happens, but it's one of the few comfy holds for me, right? Unbothered, moisturized, happy, in my lane. Maybe I'm not focused because I'm not really thinking too much about it, but hopefully I'm gonna be flourishing like this Pepe here. So as I was thinking about Frax and the Trinity, it seems like a novel concept, right? Like you have a liquid staking derivative, you have, I guess, it's your own stablecoin, and you also have a lending money market and your own native AMM. But I mean, I think given the size of Frax, I think it is innovative. But something similar is happening on Algorand, and I've never suggested anyone like buy Algo, because I mean, all tailwinds, I think, will just keep underperforming Ether in the foreseeable future. And, Algorand has a lot to prove. But I've seen a lot of developments for Algorand, which is pretty promising, right? For example, the GMX fork, FXDX, I mean, that thing is actually generating like a lot of volume for whatever reason. And the only pair available is like Algo. So maybe the Algorand community is so strong that they're just like lever long or lever short algo to like increase their algo. Like I don't really know what's going on there, but the data don't lie. Data don't lie. And Wormhole is going to integrate Algorand next week, right? And I was listening to this Twitter Spaces for AlgoFi, which I'll talk about later. And they mentioned that they're gonna Wormhole is gonna integrate them, which should make it less cumbersome to bridge to Algorand. And one of the reasons Algorand yields have been so good is because it's so difficult to bridge, right? I had to bridge my BTC via this bridge that, has a mandatory KYC, right? I had to KYC to bridge to Algorand. I think you can use Qcoin, but, I generally avoid centralized exchanges for bridging. I just like to operate on chain. I feel like that's where the majority of the edge is. But, I mean, if you're bridging across ecosystems, then maybe it doesn't really matter. So maybe this can lead to more capital inflow into the ecosystem. Probably not, but maybe. And then AlgoFi, right? This team is pretty strong actually, and they shipped V2 of AlgoFi, right? I mentioned it last month, but now you can use LP tokens as collateral. So right now you can provide liquidity for USDC stable, use it as collateral, borrow against it. So you can get paid 17% to just deposit this, right, as collateral, and then you can borrow. I don't know why the logo is not showing, but you can borrow Tether right, for free essentially, with the incentives, and then lock it on AlgoFi for 12%. So depending on your health factor, I mean you're essentially using your stablecoin LP as collateral to borrow stablecoin. So maybe you can be pretty aggressive with your LTV and whatnot. Maybe just because they're like smart contract risks, right? Algorand smart contracts are less battle tested. Maybe you shouldn't be too aggressive. But I feel like this is like the best stablecoin form in crypto, and people just ignore it because I don't know, like they don't like algo, or like it's not EVM or something. But I think that's where the edge is. And STBL is similar to Frax. I mean, not really. It's similar to MakerDAO, right? And DAI, where it's an over-collateralized stablecoin, and anyone can borrow anyone can borrow stable at a fixed interest rate, right? So, obviously you can obviously people are incentivized to borrow USDC and Tether because of the emissions and whatnot. But I feel like fixed interest rates for a project native stablecoin, maybe that's where some use cases can be. And they also mentioned that composability, so protocols and DAOs can mint STBL and borrow against it. And they're looking to expand the amount of collateral assets more than LP tokens, which I think is interesting. So obviously these rates are pretty good. And yeah, I say here, I think Algorand has the best stablecoins farms right now. Ref Finance on Near is also really, really good, right? I was on there for like 2 months or something, right? And like I got some free tethers, and like I was very, very happy with it. But I bridged out because there is bridge risk, right? Because the Rainbow Bridge is a mint and burn bridge, and I don't necessarily think that the Rainbow Bridge is risky, but I just like don't want to think about potential bridge hacks, right? I just like want to de-risk as much as possible. But on Algorand, these USDC and USDT is native, so you're not opening yourself up to bridge risks. Go BTC and Go ETH, which is like the I forgot what the bridge is called, but it's these are bridge assets, right? So if you hold these, then you are prone to the bridge being exploited. But Tether and USDC is native, so maybe this is interesting to you, right? You can just bridge USDC through Qcoin or something, right? Or Tether, just enter this farm and then borrow Tether against it, farm here, right? And I think Algorand does have some potential in the future. The team's building on it. They're pretty strong actually, and they have a lot of investors. They have a lot of capital. Yeah, they've raised a lot of capital. So similar to Solana, Avalanche, Near, I think it's also fine to include Algo in the list. Algo on the list of L1s that in the short term I'm not really interested in, but mid to longer term, they have capital, they have devs, they have a bunch of people building on it, so they are going to try to find product market fit. And even if it doesn't work, I feel like Algo will have at least one hype cycle, which they have not had yet. So for that reason, I'm just going to keep accumulating Algorand and just chill there. And I've also mentioned this too, but AlgoFi is going to drop a token in late August. So I've been waiting for this for quite some time now, and I feel like the AlgoFi token can do decently well. They have their own stablecoin, they have their own DEX, they have both XY. I think they have their own XY equals K curve and also a stablecoin curve called NanoSwap, which is like they have Uniswap and Curve products on AlgoFi, and they're trying to be this liquidity hub, and I do think that they have a reasonable chance to do so. They're a smart contract risk, so just don't go YOLO all in. But I definitely think it's interesting. For me personally, I mean, despite the smart contract risks, I'm on all these applications, right? So I'm at AlgoFi, I'm on Pact Finance, which is their DEX. They have liquidity mining incentives. Tinyman, liquidity mining incentives, and Folks Finance. All these products have liquidity mining incentives, which is all paying out pretty handsomely in Algo. And I do expect all of them to have a token at some point. AlgoFi is going to come with it first. So I'm just going to park my capital there. So what I'm doing is I have BTC deposited on both AlgoFi and Folks Finance. I'm borrowing stablecoins against it, and I'm just like farming in various avenues. For Folks Finance, you can use LP tokens as collateral, right? So you can LP for Pact Finance and Tinyman, use that as collateral, borrow stablecoins against it, and enter farms. I just suggest everyone check it out. It's really difficult to look for stablecoin yields right now, and I think the best deals right now are incentivized yields like this, this Near Ref Finance. or Avalanche, or a few things like Stargate, right? And one thing about Stargate, let's talk about Stargate, right? Because I feel like a lot of people, they get too caught up in like the nominal yield that they see, right? The nominal APR, APY that they see. It's like, I see this a lot because people say like, oh, on-chain yields are so bad, right? Look at Stargate, the yield's only 5%, it's so bad, right? And then, price goes up a lot, and then, everyone's like, oh, Stargate is paying you 11% in stablecoin yields, high yield, amazing product, right? I mean, it's like people don't really think too much about like what they're being paid in, and like what does the yield actually mean? Most yields in crypto is subsidized, right? There's very, very few real yields, and the real yields tend to be on the lower side, so it doesn't really excite people. With Stargate, I do think they have. I mean, it's a good protocol. It's an amazing team. I do think that they are solving issues. So, I mean, I'm not selling this on a pump, right? I mean, maybe you can sell it, right? Maybe if you've been farming. I mean, I've been farming this for like many months, so I have like a decent Stargate stack. But I'm not really selling this on this pump. Like, with everything I hold and everything I farm, I have a multi-month time horizon. And obviously, maybe selling this at 130% pump makes sense. But generally, like, I feel like in crypto, like the majority of the gains aren't. Let me take that back. I feel like everything you own, like you have to have a plan in mind, right? And my plan isn't to just like sell into this pump. Like my plan is to just wait for the omni-chain thesis for Stargate and Layer 0 to play out. And if it does play out the way I think it will, I do think Stargate has decent upside from here. Like, not gonna lie, I do expect like this type of price action, right? Because like how can this pump be sustainable? And maybe in like 2023, it can like maybe it gets like $1 or so, $1 or something. And also if you LP for Stargate, you also receive swap fees, which is like nothing, right? Because no one's bridging from like no one's bridging from Alto ones into Ether right now, or vice versa. So the thing with Stargate is that the omni-chain, multi-chain thesis is super weak just because there's not that much activity on chain. But once activity does come back on, then people will be like, Stargate is the next 10x opportunity, right? That you need to know about. But I'm not gonna buy this. I'm not gonna sell into this. I'm just gonna keep farming. And you can borrow against your collateral on Aave, on Avalanche, Tether, right? Be paid to do so. And I think Stargate, you're being paid like 10-12%. And similarly, like Algo, right? Maybe like these yields aren't that attractive to you, right? Maybe it's not worth the effort to bridge here. But let's think about the potential upside for Algo. I think Algorand has. Let's actually look at the price of Algo. It's like 30 cents or whatever. 30 cents. Its previous all-time high was like $2, right? So if it gets back up there, that's a 7x increase, and if price does go to $2, then the effective APR is 84%, right? So you have to have a longer term time horizon when it comes to these things. I think people just say that like yield farming is dead just because APRs are like low, but if you're actually farming things that potentially has like fundamental value, then I don't really care what yield I'm paying in currently, right? I'd rather earn like 5% on Stargate than like 15% on some random token that's gonna dump to zero in like 2 weeks, right? Anyways, let's talk about some more stablecoin farms. So I entered a Sperax farm. I said I'm gonna wait to do this until they ship this proposal, and it's kind of weird because this is like a pretty closely contested proposal. But this concludes Saturday, I believe. Yeah, and they're trying to grow their stablecoin, right, USDS, by making the mint fee 0% and removing the SPA requirement to mint it. So the only way you can mint USDS right now is to either buy it on Uniswap V3 on Arbitrum or mint it by depositing USDC and SPA and paying some mint fee. So it's not really attractive to mint right now when you can just like wait for this proposal to pass. But maybe it's not going to pass. But I don't really see a reason why it shouldn't pass. But I entered it because I was checking Uniswap rates for USDC to USDS, and I didn't really like the slippage rate, or like the swap rate was pretty good. So I just like entered it. So I just like converted some stable coins, and I'm in this farm. Obviously you're being paid in the native token, so when the prices are higher, this was like 20%, now it's like 10%. I do think that they have. I feel like they're building an interesting product. They're building a UniV3 manager where they incentivize emissions. If other DAOs pair their native token with USDS, which is beneficial for all parties because for the DAO perspective, from the DAO's perspective, they get to have someone else manage a UniV3 position, which is going to facilitate tighter swaps, a better user experience for anyone that wants to buy the token, and from Sperax's perspective, if they have partners, then they get to increase the demand for USDS, which is going to grow the market cap and will make the stablecoin more liquid. So I think it's interesting. I mean, they're kind of like cloning Frax BP with this UniV3 manager position. I mean, this is super speculative. But the team is strong, so I'm just gonna enter this farm, and I'm just gonna park my stablecoins here and not really think about it. Okay, so let's talk about XMON. Let me just drink some water real quick. What do I even have here? Yeah. So first of all, right. So first of all, I mentioned that I do think that, or maybe think is not the best way to put it, but my mentality right now is in this dip buying mentality. I do think that the stock market has bottomed, and I do think if the stock market has bottomed, then crypto is most likely has already put in a bottom, right? There are potential events like Vitalik dying, or like the merge getting wrecked, right? Maybe that could happen, but generally, aside from black swans, I do think both markets, both risk assets, have bottomed, and therefore, if that's my bias, then any dip is a buying opportunity, right? There's a lot of fear in the markets, and I mentioned, hey, I hedged my GLP with Avalanche, and if we get meaningful dips, I'm gonna buy stuff. And definitely, a -8% day on both BTC and Ether is characterized as a meaningful dip, right? It's kind of sad, right? Because the Nasdaq is down 2%. Nasdaq is down 2% in BTC and Ether, which is supposed to be the safer assets, is down 8%. There's definitely some people getting liquidated right now. But I'm just buying the fear, right? And just sticking to my guns. And the reason I chose XMON over GLP, Try Crypto, and Arbitrum plays, I'll go over that later, but let's first talk about Sudoswap, right? I feel like generally, I'm more attracted by XMON and Sudo just because it's so misunderstood by the broader NFT sector, which I think is quite ironic, because I think Sudoswap has a pretty reasonable chance to take significant market share away from OpenSea on the total NFT trading volume in the upcoming months. And of course, NFT activity is abysmal right now, and I definitely acknowledge that, right? So I'm not expecting hockey stick type growth in Sudoswap volume or fees. I'm just expecting that, hey, I'm bullish NFTs. I don't want to pick out NFTs to buy. I don't have an edge there. So I want to buy NFT Infra. And I've said that for many months, but there was never a quality option because LooksRare and X2I2 is pure inflation tokens, farm tokens. So I just don't want any part of that. But Sudoswap is able to attract LPs and get people to trade NFTs without having to do token incentives. And I guess the ironic argument is that I mentioned this in a live stream, but I've spent the past couple of days just binge listening to takes by NFT people on Sudo, and they really made me recognize how divided this topic is and how misunderstood Sudoswap is, and I guess also the lack of understanding that NFT people have when it comes to DeFi concepts. Because I think from my perspective, I think Sudoswap is this revolutionary product that allows LPs to create custom curves for NFTs, right? It makes non-fungible tokens fungible. I think that's a great use case. And that's primarily the reason, I'm going into this. But NFT people, they interpret Sudoswap as this AMM that takes away royalty fees for creators. And of course, that's part of it, right? I guess like that's part of the appeal. But like listening to these NFT people saying that, I'm going to protest, exchanges, marketplaces that don't charge royalties. I'm going to choose to pay, 7 to 10% royalties forever because I want to support creators. I feel like these people, like, it's delusional in a sense. Like, that's not really, like, if you think about markets in general, right? Like, people had to pay $5 to trade stocks on Fidelity, like, I don't know, like 5-10 years ago, and now every platform has zero fee trading because Robinhood basically undercut everyone's fees via payment for order flow. And similarly, it's unreasonable to expect that fees are going to be this high forever, right? Like 2.5% OpenSea fees, like what the hell is that? Like 5 years from now, like people are going to be like laughing at the fact that like, are you serious, bro? Like you paid 2.5%, like like it's gonna be obfuscated over time, and both royalty fees and both swap fees, or marketplace fees are just gonna converge to zero over time. And Sudoswap charges 0.5%, which is still pretty expensive, right? I mean, we still pay Uniswap 0.3%, which is kind of ridiculous for most volatile pairs, because like Coinbase, Binance, like they charge lower fees and whatnot. I mean, it's definitely gonna get there. So the fact that the NFT people, who should be the most excited about Sudoswap, them not understanding it, them hating on it because they feel threatened, I just feel like all I see are potential new buyers in the upcoming months, right? Right. So there's one, and also I think there's general fear around buying XMON because of the uncertainty around the Sudo token redemption, right? So it is confirmed that one XMON can be converted to some units of Sudo. I heard it's like 10,000 Sudo, right? So like if one XMON is $30,000, then you can redeem it for 10,000 Sudo tokens worth $3, something along those lines. And I guess there's also uncertainty around dilution, right? So the market cap right now is like 80 million. So what if half of what if XMON holders get diluted by 50%, right? Then you're effectively buying Sudo token right now at a $160 million market cap, right? And people think that that's a risk. And that is a risk, right? That's an uncertainty. I don't have an answer to it. No one has the answer to it. The team keeps it close to their chest. And who knows, like maybe the team doesn't even know because they're too busy shipping products right now, which I think is which I think should be the priority. So I think, given my study on the team, given my study on given my interactions with the team and what I've seen online, I do think that the market generally is. I feel like there's so much fear in the markets that people are just assuming that something bad is more likely to happen than something good. But I think it's more likely that the team will surprise to the upside than to the downside when it comes to the Sudo tokenomics. I have no idea if there's going to be Sudo staking to earn fees. I mean, ideally, I want that, right? That'll be like crazy, right? That'll be an amazing token with like, major cash flow implications. But even if Sudo doesn't have staking to begin with, right? And it's like this pure governance token, I still think that it's going to have value because look at Uniswap. Uniswap is the number one DEX. Everyone knows that. And therefore, the Uniswap governance token is a form of regulatory arbitrage where, once if a day comes where Uniswap can be a security, right? Like that, the token's gonna like 2x in like 2 days, like for sure. So there's always gonna be a price that someone is willing to pay for the Uniswap governance token because it's a way to bet on regulatory arbitrage or whatever. So similarly, even if there's like no staking, I still think that Sudo is gonna have value, and I think that the current price is way too cheap in my opinion. And I think the main important factor here, like everyone is too focused on the wrong thing, and they're focused on the royalty aspect. But I think the main driver and the main reason I'm excited for it is that Sudoswap, like I mentioned earlier, makes non-fungible tokens fungible. It's a financialization of NFTs via this UniV3 concentrated liquidity model, which I think is going to solve problems. Right? There are going to be new projects that build front ends on top of Sudo. They're not out yet, right? I don't know what people are going to build, but people are building on it, right? If you go on Twitter, right, we see talks of people, I'm building on top of Sudoswap because I think the technology is really interesting. I think Sudoswap is also going to enable more types of NFT projects to launch. I think the meta right now for, I guess, OpenSea PFP projects are like 10,000 PFP collections, but if people can create if Sudo can enable non-fungible tokens to be fungible, then I can definitely see a scenario where new projects launch with 100,000, a million, 10 million, 1 billion, an NFT project, right? Like, for example, like maybe someone creates like this AI project, right, with a billion supply. Most of their liquidity is on Sudoswap. And, it's going to facilitate better swaps, like lower slippage. And because, everything's on chain, there's always instant liquidity. People will no longer undercut floors to, exit. We see this with Sudonauts. Sudonauts isn't doing that well, to be honest. But like, I'm okay with that, right? I basically bought it for the culture. And like, I borrowed AVAX, I borrowed AVAX, bought ETH with it, and I used that to buy Sudonauts. So like, even despite I'm still up on my Avalanche hedge, despite me borrowing a bunch of AVAX to short Ether, to buy Ether. But anyways, I feel like there's a lot that people are overlooking, and it's the concept of like, what if you could purchase the Uniswap governance token, right? Back in like 2019 or 2020, right? Because Uniswap back then, I mean, they had this basic product, which barely any people used. And back then, in 2019, early 2020, it's easy for people to say, like, who the hell would use a decentralized exchange, right, when they can swap on a centralized exchange, right? Like, why would anyone use Sudoswap when people are so familiar with OpenSea? But what people didn't realize was that Uniswap allowed for anyone to be an LP. Uniswap allowed for new tokens to launch. And, without Uniswap, nothing would exist. Right? Without Uniswap, Aave wouldn't be a thing, like MakerDAO wouldn't be a thing, and like, Compound wouldn't be a thing, right? Because you need deep liquidity to, enable on-chain liquidations, right? So similarly, I do think that Sudoswap with their custom curves is going to enable more types of NFT projects. I have no idea what's going to be built, to be honest. I just like I feel like, given my understanding of DeFi, I just feel like it's going to happen, and I feel like I have an edge because I understand that, but a lot of people don't understand that. So if that's the case, if that's the meta, then I'm more than happy to just keep accumulating this thing at sub $100 million market cap, right? I mean, today it's like $80 million market cap. And Owen mentioned that LBPs will be possible. Do I have a screenshot? Maybe not. Let me pull this up. Let's see. Balancer LBP. We see this. Was it this one? Right. Okay. So this one. Right. So Sudo is going to enable these LBPs for launches, and I feel like one problem that NFT projects face are like these botted mints, right? Like, think about the other side, like land sale. Like it almost basically broke Ethereum because all the bots were trying to mint this thing day one, right? Like, I think gas spiked like 4 digits because I think the price of the land was like flat, right? So it was like a first come first serve basis. But LBPs are this product created by Balancer, right? It's a curve where people can launch tokens and they can customize these curves where the price is designed to go down over time. So if a bot wanted to like mint this immediately, it would pump the price a lot, and then average Joes like you and I can just wait for the price to go down, and maybe people buy. So like it just like keeps going up and down. Yes, it's like something along these lines, right? So it's like this custom curve. People buy initially. It's designed to go down. People buy, right? It's designed to go down, buy down, and it creates more fair price discovery for new tokens. And this thing can be done for NFTs, right? Like literally NFTs. So I feel like there are going to be more projects that launch on Sudo. And I don't know when this is going to ship. They're working on it, right? So I have no idea. But everything I buy right now is with the multi-month time horizon. And when I say multi-month, I don't mean 2 months, right? I say multiple months. Multiple months can mean like 6 months, right? Like, I mean, I don't know how long it's going to take for Sudoswap to get to its full potential. But $80 million market cap, I feel like it's just way cheap. I mean, not financial advice, but like, I don't really know what. Okay, maybe I shouldn't say that. I just feel like it's mispriced, and like let's say the worst case scenario, right, is that maybe XMON holders get diluted 50%, right? So you're buying XMON right now. It looks like $80 million market cap, but effectively you're buying Sudo at $160 million market cap. But even if that's the case, like I feel like that's still pretty cheap. I don't know, like this new DeFi primitive, NFT primitive, that's going to enable more use cases, which is going to enable better NFT liquidity, financialization of NFTs. I feel like that's a multi-billion-dollar token. And I could be wrong, right? I could be wrong. I'm not an NFT guy, but I definitely understand DeFi, and I definitely understand how DeFi has evolved, and I definitely understand the importance of liquidity, right? Liquidity is so important. Everything in DeFi centers around liquidity. If your token isn't liquid, then your token is trash. And similarly, if your NFT is not liquid, your NFT is probably trash too. And if your NFT is not liquid, then people will be less incentivized to trade it. And then it's going to create more volatility for the NFT, because if a bunch of people want to sell, or if like 10 people want to sell, like one person undercuts the floor, then like, the floor goes down, and then other people try to undercut the floor, it goes down, and then it just like creates like this crazy volatility in the NFT markets. And one argument that I've heard about royalties is that one thing that NFT founders can do, right? Because, like let's say, someone charges 5% royalties, right? I've heard NFT founders like that cause FUD for their own project just so they can get people to sell it, right? Because every time someone sells, they get 5% of that, right? Like, I feel like, maybe Sudoswap is not the solution, but I feel like, just flat royalties maybe isn't like the best way to align incentives. Right? Like maybe just a better way is for, NFTs to launch on an LBP curve, and those proceeds can go to the treasury, and maybe the team reserves like 30% of their NFTs in the protocol and liquidity. They receive all those fees, that goes to the treasury, and whatever money that they raised on day one can be used to build a product. And at the end of the day, like NFTs, like it doesn't just have to be PFP products, right? I feel like Sudoswap can enable more types of NFT products to launch. One example is Butterfly, right? Redacted Cartel. They're going to make their locked Butterfly positions into NFTs and trade it on Sudoswap, right? So not only can Sudoswap make PFP products more liquid, it can also allow for new DeFi primitives to emerge. I feel like, to buy into this, you have to be a rational optimist. All my life, I've been a rational optimist. And sometimes it's good, sometimes it's bad, right? It's bad to be just like this pure optimist who just thinks everything is gonna do well. So like you lever your net worth to like, start like, I don't know, some random startup or something, right? Like that's obviously not good. But the rational optimist inside me says that, buying here is good, right? And buying here is good. We'll see, right? But like, even in the Discord, there's like a bunch of skepticism, right? And obviously your YouTube, Twitter, there's so much skepticism. It's like, it's just another looks rare. NFT people will boycott it because no royalties. NFT people are gonna blacklist wallet addresses if they don't support royalties. But like, I feel like I know where the trend is going, and I feel like Sudoswap fits in that mold. And maybe the answer isn't Sudoswap, but maybe like a fork of Sudoswap that fixes more issues. But given the community that Sudoswap has, the Sudoswap community is like insane. And I'm not just talking about, major influencers, but, just the collective community is very, very strong. And I don't know how much merit this has, but I feel like there's also additional bid that can come from institutions after the Sudo announcement comes, right? Because I feel like if you're a fund that want to give your clients NFT exposure, Sudoswap is kind of interesting because, you don't have to make a bet on an individual JPEG, right? You kind of just get to make a bet on this NFT infra, which is attractive. But what if you allocate capital to XMON right now, and the Sudo token distribution is very unfair, right? Like maybe it's like a 10%, you get diluted like 90% by 10x, like a factor of 10x, right? I feel like if that's gonna be the case, then, or fund managers have to think about this because they have to think about reputational risk. If they buy XMON before the Sudo announcement, I feel like they do open themselves up to reputational risk because there is uncertainty around Sudo. So maybe there are just more buyers that just happen to come after Sudo gets announced. And I feel like it's impossible to gauge the average market sentiment across all market participants in the space right now. But, from me scouting every social media channel, that I know, I just feel like sentiment is way too pessimistic on this thing. So I just think that it's more likely to surprise to the upside once the Sudo token actually comes out. That being said, enough Jimmy jammering, whatever. Let's talk about this portfolio, right? So I allocated like roughly 5% of my port into XMON, and given, so this is how my portfolio looks. Majority majors, happy with the majors. ETH definitely has strength right now. I really want to see Bitcoin outperform, right? Because, as much as I say like Ether more likely to outperform Bitcoin, I do believe that, but we can't have a proper crypto bull market without Bitcoin. Like just having at least one dominance run, right? Like maybe it happens after the merge, right? Maybe that's what ends up happening. But like Bitcoin, like come on, like do something, do something, right? Because even on the downside, like Bitcoin's losing dominance, which is kind of weird to see. But some Bitcoin, some Ether, quarter of my portfolio into NFT infra. If we get another correction, I might buy more. Maybe get to like 30%. Like I mentioned, I'm in a dip buy mentality, right? And I'm not LARPing, right? Like even myself, right? I'm opening myself up to reputational risk by being publicly bullish this NFT infra that NFT artists are against, right? Like maybe NFT people like start bashing me because I'm like shilling the fucking Sudoswap. And also, like, if I'm wrong, right, and like the market, like if Bitcoin goes to 10K, then people will think I'm stupid or something. But I'm not afraid of being wrong. So I'm not gonna be the guy that's like, yeah, you get the point. I'm not afraid of being wrong, right? Like people know that, like when I build conviction, like I really build conviction, and I'm willing to live with the results, right? Whether it's good or bad. Still 22% stables on top of the Avalanche GLP hedge. I really recommend people to think more about hedge, like pair trades. I think Alt-L1 tokens are good candidates for this because, I just think Alt-L1s will underperform Ether, and maybe even like Ethereum-based altcoins. So if you want to buy, like, some ETH altcoin or like Ether, right? Maybe you can like mute volatility in your portfolio by like borrowing against AVAX, borrowing against Phantom, right? Something along those lines. I feel like that can be that can be totally fine. Even like Pseudonauts, right? Like I borrowed AVAX, sold it into Ether, and I bought, Pseudonauts with that. And despite that, like I'm still up on my hedge, and I'm probably not gonna close my hedge anytime soon. I'm not doing this hedge to make money. I'm more just doing this to mute volatility in my portfolio. My portfolio is still volatile, right? Of course, but I'm used to volatility, right? Like since the age of 18, like my net worth has been up and down, because like that's just like my hobbies just tend to be like volatile things like poker and whatnot. Anyways, 8% into stablecoin Curve Eco. So hopefully FXS can do well. Hopefully, and then Arbitrum ecosystem. And this is my shopping list. GOP Try Crypto, XMON, maybe some DopeX. I'm kind of happy with my allocation right now. I kind of want more applications to launch on Arbitrum, because I don't think the Arbitrum token is going to come out this quarter, like earliest mid Q4. So there's still time. There's no rush. And Plutus, probably a Q4 play, if I even want to buy it, just because there's like massive unlocks happening August, September, October. So maybe, there can be more distribution of tokens there. But right now I'm just farming Plutus via DopeX, Plutus DopeX. I'm farming Sperax via the stablecoin farm, and I'm just monitoring the entire Arbitrum ecosystem, and my time horizon for everything is Q4 and beyond. Okay, when I say multi-month, okay, and even Q4, maybe I'll say mid Q4 and beyond, because like I feel like some people just have too short a time horizon when it comes to crypto, but you really have to just rewire your brain to just assume that we're not going to see up only anytime soon, but on like a 2-year time horizon, you might be it might be up only, right, if you allocate to the correct assets. And also one thing I noticed is Arbitrum flipped Optimism, right? I mean, Optimism, I think it's pretty fitting that both Optimism and Phantom are next to each other, because I think Optimism, it's mostly like Phantom projects that like fork their project over to OP to get like free money, but I don't necessarily think that the Optimism ecosystem has that much staying power. Could be wrong, but the point is, the point isn't that I don't like Optimism. The point is that I like Arbitrum over Optimism, and I think the wider market will agree with me on that. So if you're looking to allocate into L2s, it's probably better on a risk adjusted return basis to focus on Arbitrum plays, even if Arbitrum doesn't do, even if the Arbitrum token doesn't come out for the next couple of months. So that being said, that's going to be the end of the video. Let's recap the market. Everything down. Sad. Let's not look at the market. Yeah. Okay. Sounds good. Hopefully this video was useful. Have fun farming out there. And let me know what your thoughts are in the comment section and in the Discord. Bye-bye.